Ladies and gentlemen, how you doing? Welcome back to M&F Forex Traders. This is Matthews, and you're welcome. All right. So today, as you've seen from the title, I'm going to talk about something very important. I've talked about this several times, but I feel like most people don't still get it up to this level, right? So I wanted to make a new video, a tutorial. I've made several tutorials that I've seen that you guys love them, and I wanted to bless you with some more. Okay, so please make sure that you finish watching this video because it contains very important information that you can't afford to miss. Make sure you stick through the video to the end, and yeah, I hope you enjoy it. All right, so let's get started. Right, this is the most important setup when it comes to QM strategy. Okay, it's a very most important uh setup, right? My personal favorite, it's called the QM plus fake out setup. Okay, and I want you to concentrate on this particular setup, right? It's called the dual resistance or triple resistance. So today I'll take you through the dual resistance and what happens and the reasoning behind everything else. Okay, so this is what you have, right? You might have something like this where the market gives you a resistance right here, right? You have one resistance and you have another resistance at this level, right? Like that. So what happens is that as retail traders, we are taught that whenever the market gives us a double resistance, like here, whenever the market gives us resistance like this, where the market respect a certain level twice, okay, that level becomes a strong resistance according to support and resistance strategy, which most of retail traders use, right? So what happens is that since we are told that, let me actually use black, since that we are told that when the market respects a certain level twice, right? If it respects a certain level twice, like this, something like this, then this level is strong. Then we're supposed to sell the next time the market comes to this level, right? So you have something like this, right? And then we are told sell on the third resistance, okay? We are told to sell on the third time the market is going to come to this level, right? And this is what we do. So this is the first time the market comes to this level, and this is the second time the market comes to this level. So in this instance, I'm going to call them R1 and R2, right? This is R1 and R2. So if you're planning on selling on this level, right, meaning you are anticipating a third resistance here, and then when you have that resistance, you're going to sell, and then your stop loss is going to be put around this level right there, 20 to 30 pips around this level. So this is 20 to 30 pips stop loss, right? And guess what? There's going to be a lot here, and smart money are able to see that, not your trade individually, but because they know that that's what support and resistance traders trade like. They trade like that. So what happens is that you put a stop loss right there, and then you sell here. Not just you, a lot will sell here. All right. So a lot will sell here, and then you put a stop loss above that level. And guess what happens? Since they know that the market, since they know that you guys are trying to sell here, and your stop loss is about 20, 30 pips above that level, and guess what? They will just bring the market to this level right here and take you out. The market just come here and they will take you out like they knew you were there. Okay? And then the market will reverse like this, give a little bit of a little bit of a push upside, and then drop even further. And then be like, what happened? I knew this trade was going to go down, right? You've been stop hunted, and the market has gone according to your analysis. That sucks. I know that feeling sucks. All right. So what happened here? So the big traders, the institutional traders, had their orders around here. These orders had to be filled around this level, and they wanted you to be buying at this level so that they could sell at that level right there. And they knew that because there were a lot of people selling at this level. They knew that there are a lot of traders selling at this level. Okay, so that's what happens. Then you end up being taken out, and the market continues to go in your favor. That feeling sucks. It hates. Okay, but you could have prevented that by waiting for that liquidity to be taken out because of this. Because of these people who are trying to sell here, the smart money are able to see that, and the market is able to come to that level and take out all that liquidity and then drop. Okay, so what can you do different? The only thing you can do different is, one of the things you can do different is by making sure to wait for price to take out the liquidity. And once the liquidity has been taken out, then you can sell. That's what we trade when you use smart money concepts like the advanced supply and demand strategy, the Quasimodo strategy, right? So what happens is this. So since we know that the market has to take out the liquidity above, then we can play it smarter. We can be smart about it, right? So what happens is that this here becomes a higher high. Okay, simply let me delete this. So this here becomes our higher high. Okay, and then this double resistance is what we call a dual resistance, which is our QML. Okay, and then this is a rally base drop supply. So this is a rally base drop supply zone right here. Therefore, we look for a level to sell from either here or our MPL, which we've talked about in several videos in the past. Okay, so you can go back and watch those videos. So what happens is that this is our QML, and then at this level here we have our low, and we have a low and break of structure right here. Okay, low and break of structure. You guys know that if you know a little bit of market structure, you understand that once the structure has been broken, that's a signal that the market is going to reverse. Since this is an uptrend, and the market now, instead of making a new higher high, it fails to make a new higher high. Therefore, it breaks this higher low here, signaling a market change of structure, a shift in the market of structure. Okay, so when that happens, then we must be prepared to sell once the market comes back to this level. Why does the market have to come back to this level? Because they couldn't take all their orders at once, so therefore they have to come back to the level here so that they can take the unfilled orders, and that will be your chance for you to actually sell. All right, so therefore you can actually swim with the sharks. Okay, you have to swim with the sharks. That's what you want. Otherwise you get eaten up, and you don't want that to happen to you, right? So this is what happens. So once the market has broken the structure and that has formed a lower low here, a lower low has been formed, and then you wait for price now to start coming back to that level. So this is what happens. Around this level here, you're going to have something like this. Okay, so the market usually starts to come back to this level. It may come out like this and drop. Okay, so there are a lot of ways in which the market can come back to this level. Okay, and then the market now goes up. So it can come to this level, it can come to that level. So it comes to somewhere to this level here, and then drops. So what happened? So the market gave us a resistance 1 and a resistance 2, just like we had here, you see. But then the market comes to this level here, and when the market comes to our level like that, then we will not be afraid to pull the trigger. We shouldn't be afraid to pull the trigger when the market comes to that level right here. We shouldn't be afraid to pull the trigger once the market comes here. You see what happened here? This level here is just like this level here. Okay, let me just highlight this. What happened here is the exact thing that is happening here. You see that? That's the exact same thing. So what happened is the market gave us two double resistance, broke the structure, went to the downside. Again here, the market gives us this resistance, dual resistance, it can be 3 times, and then the market takes out that resistance there, comes to a certain level and then drop. Remember, where it's coming is where we have a fresh supply zone in this particular case. So it can be at the top here, or it can be at the MPL. So where the market reverses from is where the fresh supply or demand zone is. It won't always be at the QML setup, at where the QML is. It won't always be here. Okay, it won't always be at the QML. What determines where the market is going to reverse from is the presence of fresh supply zone. So you have to make sure that you have a fresh supply zone around this level. So the market will always respect that level. Not always. It will most of the time respect that level and actually drop. Of course, this doesn't happen every time. And when you're following these kind of setups, they won't happen every day. Trust me. You won't find yourself in trades every day. Okay? Therefore, you have to keep looking. And just because you have this kind of setup doesn't mean that it's going to work 100% of the time. That's not how it is. So you have to be patient. Do your back testing, forward testing, so that you have the confidence in your strategy that you're able to execute these trades flawlessly. That's what you need. So let's do some basic labeling. Right here, this is what you call a liquidity zone. Liquidity zone, or we call it a fake out zone. But the liquidity zone or the fake out zone. You have to be very, very aware of this. You have to be aware of this, because if you're not, you'll be taken out. You become part of the liquidity. So if you're not careful, you become part of the liquidity. It's true. So you have to make sure that you are aware of this. Wait for this to be taken out. Wait for this level, this void here to be filled. Once the void has been filled, then you can go ahead and wait for your confirmation to sell at that level. Very, very, very important. And then what we have here is what you call a rally base drop. So it can be a rally base drop, it can be a drop base drop. So in this instance, it's a rally base drop supply zone. Very, very, very important. So that's where we find our zone. That's where we're going to actually sell from, because we know that that's a level which is most likely to hold. Ladies and gentlemen, it doesn't mean that it's going to hold every time. No. And by now, you must have developed that mindset. Okay? Not all trades are going to work. Your job is to objectively identify your setup every time. That's what you have to concentrate on. Make sure that you get the best setups every time. So the outcome of an individual trade is none of your business. You don't know. You don't have to know. You don't have to know. The only thing you have to do is to objectively identify your setup every time, and you'll be good. You have losses, you have wins, but most definitely your wins are going to be bigger than your losses. That's the fact. So this is a rally-based drop supply zone, and therefore we plan to sell at this level. Our entry is going to be at this level, and our stop loss in this instance is going to be above the higher high, right? It's going to be above the higher. Make sure it's above the higher high. If you are entering from, if your fresh supply zone is at the higher high right there, make sure your stop is above the higher high. Otherwise, you'll be stopped out and the market goes in your favor. That's very, very important. Okay, and of course your target is going to be your next fresh demand zone, right? That determines where you're going to actually take your profits from. And make sure you pay yourself as the market makes money available to you, because anything can happen. Just like Mark Douglas best puts it, anything can happen in the market, and you don't have to know exactly what's going to happen in the market for you to make money. So make sure that you objectively identify your setups every time. So if you can follow these setups every time, make sure that you do exactly as I've said in this video. I'm telling you, yes, you have losses, but over a series of trades, you will turn out to be profitable. Okay? That's what happens. That's what we need. That's the consistency that we need. So we need to be consistent in the market. We need to be consistent in identifying our setup. We need to know what we're doing every time in the market. We need to know exactly where we are going to be stopped out, where our setups is going to be invalidated. We have to know that every time. So you make sure that you know exactly what you're doing. Otherwise, this is how it is. This is one of the best setups you find out there. One of the best setups you find out there. And one thing you can do is just take your time, master this setup, right? And you see how important it is. So let me show you what happened on the chart. I'll show an example of what happened on the chart, and I hope you enjoy it. So let's go. Yeah. So this is NZD versus US dollar. This is New Zealand dollar versus US dollars, right? So this is what happened here. Let me just delete this. Right here, what we had was the market in an uptrend. The market was in an uptrend. You can see making higher highs and higher lows, higher highs and higher lows, right? And then all of a sudden, you have a break of structure. So right here, this is my higher high. Okay, this is my higher high right here, and this is what I'll call my QML. I'll show you in a minute. This is my QML. I actually had a dual resistance here, and then this is my low and break of structure right here. Very, very important. So I like to do this. Yeah, this is my low and break of structure right here. Okay, so if you zoom in right here, you realize that actually the price had a lot of resistance here. Okay, we had a lot of resistance at that level there. Pay particular attention, guys. So we had a lot of resistance here. Okay, so this is R1. Let me just label that. So this will be my R1 and R2 right here. So this is my R1. No, it might not be very visible because this is on the 5 minutes time frame, and then this is R2. Okay, it's R1 and R2. This is what we call a dual resistance. And remember what you said? Once scalpers, support and resistance traders see this, they want to sell on the third touch there. And then guess what happens? The market takes them out and then drops according to what they thought the market was going to do, right? And the market drops. So let's go back to where we were. Yeah, let's go back to how it was. Yeah, so we have this right here. Okay, so you have R1 and R2. So this is our level here, resistance 1 and resistance 2, right there. Okay, so what's the next thing? The market has formed a lower low here. Nice. Our setup is complete here. So what are we waiting for? We want to see how the market is coming to our level. And we know that the market can come back to us in form of a fake out, and as our flip, which is supported into resistance, kind of fake out, or it can be diamond fake out, or it can also be a CPLQ, which is compression plus liquidity. So here you look for a level where the market has respected several times. If you look at this level, if you follow my case, you realize that this level had a lot of resistance. So that's our fake out zone or our liquidity zone right there. You realize that the market resistance, there was a resistance here, resistance, resistance, and resistance there. So let's just put that. So we had an R1 here, a very small one. We had an R1 here, right? And then we had an R2 here. We had an R3 here. And the final one here, R4. So this was R4. Let me just edit that. So R4 right there. And this was R3 right here. Then the next one was R2 right here. R2 right there. And then this was R1, right? Yeah, this was R1. So this looked very, very nice. Yeah. By the way, if you've not subscribed, this is the right time to actually hit that subscribe button, like the video, comment in the comment section, and everything, right? Make sure you do that. Okay? So this is our liquidity zone or our fake out zone. That's what we have here. So we will label this liquidity zone. Liquidity zone. This is our liquidity zone right here. This is our liquidity zone around here. Okay? So what happens is that, remember what we discussed? We have to wait for this level to be taken out. We have to wait for this level to be taken out, and then we enter right there. Okay? So look at this. This is a rally base drop. So we look for a level where we're going to sell from. Look for a fresh zone. So all this is our fresh zone. So we're going to extend this to the right side and see what happened. So we extend this to the right side and look. It was at that exact level where the market gave us a nice rejection, and then market dropped nicely. Okay, so this is our rally base drop supply zone. This is a rally base drop supply zone, a very, very nice one. And look at how accurate this was. And our entry is here. Our entry is right there. And stop loss, we say it is above the higher high. So the higher high is here. So our stop loss is going to be above here. Okay. And our target is going to be on the next fresh supply zone. So depending on which one you're referring to, the market dropped beautifully. Look at that. The market literally just broke this level, this resistance here, with a nice candle, came to a level and then dropped. Look at this. This was a massive trade. Check out. Your stop loss was just going to be about 8 pips, and then the market dropped. I don't know. I don't know how many pips. Check. From here, the market dropped over 200 pips. Just this beautiful setup. This was amazing, guys. Like, this was amazing. Okay. So as you can see, exact something that I've showed you here is the same setup that happened. Very nice setup. Everything simple and straightforward. Nothing complicated here, guys. So you guys, this is what I had for you guys. Before I go, please remember that the setup, just because I've shown you this, and I've also shown you other setups which have failed. Okay? And that's the game we're in a game of probability. That's because this setup worked out perfectly. That means the next one is going to work out perfectly. The key is you being able to stick to your risk management rules every time you take a trade. That's the goal. Because we don't know which setup is going to work. And if you do know that fact, there's no way you should be able to risk more than you're able to risk on this particular trade and the next one, because the outcome is random. That's very important. So if you've reached at this level, if you reach this end, thank you so much for watching. Make sure that you hit the subscribe button, like the video, and also make sure that you turn on that notification bell so that you get to be notified every time we drop a new video. Thank you so much for watching, and may God bless you. Until next time. Bye.